Now, let's now look at it from here. As per where we stopped in our last class, we have set up the table, opened the opening balances, we posted up all the opening balances. I will now need to do the working. That was where we had the issue with what network that day.
Yes,
now,
sir.
let's now look at it. The first working note. What will be our first working note? Let's read the additional information given to us on the question. Now, if we can still recollect on the question, we said in the year 2000, Amotekun State of Nigeria established two universities, namely Amotekun State University and Amotekun State University of Education, to cater for the indigenous of the state. The following information relates to each of the university. A. Bursa. The Bursa of Amotekun State University, Okemoson, delegated the preparation of non-current asset schedule to be included in the final account of university for the year ended 31st December 2018 to one of the deputy bursar in the bursary department. In discharging of the assignment, the deputy bursar reviewed the following documents: International Public Sector Accounting Standard, previous year financial report, non-current asset register, valuation reports. He was able to obtain the following information. Information one, we have the details, the cost/fair value at cost, fair value as at 31st December 2017. That is the closing balance. Then we also have accumulated depreciation, which is what we have entered. We also have estimated lifespan, this period, everything being given to us in detail. Then we now move to the other information. It is the policy of the university to charge a full year depreciation on assets irrespective of the month of purchase or review during the year, while no depreciation is charged on the asset disposed of during the year. We also move forward. Note 2, equipment on lease are depreciated. Equipment on lease are depreciated equally over the period of the lease. Note 3, land and building were professionally revalued during the year by Parisco and Associates, a firm of chartered surveyor and valuers, and approved by the State Ministry of Works and Housing. The valuation, which was based on market value, produced a revaluation surplus of 150 million over the carrying amount as at 31st December, as at January 1st, 2018. Now, working note 4. The university purchased plant and equipment, plant and machinery, which was imported from the United Kingdom, is at cost of 430 million 500,000. Installation cost and transportation cost to the university amounted to 20 million 500,000. Then we also have deputy bursar that reviewed the non-current assets last year, some of the computer equipment on May 15, costing 26 million. As office equipment, a reclassification is required. Office furniture and fitting costing 12,250,000 was disposed of during the year for 11 million, which was resulted into a profit of 750,000. A university entered into an equipment lease agreement with Other Finance Limited. The terms and conditions of the finance lease were also given. And the last one, during the during the year, the university acquired a fleet of vehicles at cost of 50 million. The state government financed the acquisition. Now say required. We've answered this one as per last class. Required in accordance with IPSAS 13, identify the 5 features of finance lease. We've done this one. We now said, be part of the question now said, prepare the non-current asset schedule of the university for suitable for publication 15 marks. Now, for this one, without wasting our time, let's go to where we stop as per last class. Now, the next thing is what? To go with the note. Note 1. What is the first asset we are looking at now? Are you with me? Hello?
Hello, sir.
Now, we've done note 1 already. We're under the note 2, which is the policy of the company is to depreciate the assets on full year of depreciation when they purchase the asset, and when they dispose of it, don't charge depreciation. That one, we don't have any calculation there. Equipment on lease, we don't have any calculation. But on that note 3, there's a calculation there where land and building were revalued. And now, on this note, what do we need to do? Now, can you see the Excel page?
Yes, sir.
Now, let's go. Now, if you look at it, when we maintain asset and carrying amount, how many years have we charged the asset? Look at the question. If you review the question very well, can you see the question?
Yes, sir.
Yeah, land and building. The cost of land and building is said to be 500,000, and accumulated depreciation on that land and building is said to be 50,000. That's 50 million, and it's for 50 years. Now, if they charge their depreciation is on cost, because we're told here that the charge what is on straight line method. Now, how do we know it's on the straight line method? Let me quickly work that out. See, depreciation on that, you want to calculate it. This one is not part of the working, but for you to have the understanding of what I'm doing. Depreciation is equals to cost minus car value divided by the what? Lifespan. Do you still remember this formula?
Yes,
now,
sir.
Looking at it in this direction, we can say that the depreciation here is nothing but what? What is the cost? You were giving 500. I want you to see the value of that depreciation amount minus is 0, which is the scar value, which is what? 500,000 minus what? Is 0, divided by lifespan. What is the lifespan given to you in the question? 50 years. That is divided by 50 years. That gives you how much?
$10,000.
10,000. Now, 10,000, how many years have they now charged that asset?
50 years. 50.
No. Look at what I'm trying to say. Now, this one will give us 10,000. There's no doubt about that. 10,000. There's no doubt about that. Now, if you now look at that asset, it has been charged for how many years? For them to have 50 what? 50,000. That is, they've charged that asset for 50, for what? For 5 years. 10 times 5. That is what? 50,000. That is how they got this accumulated depreciation here. Can you see it? That accumulated depreciation is what?
50,000.
Is it clear now? That is 5 times 10. That gives them what? 50. That is 50 million in abbreviation of that 1,000 we have here. Is it clear? But we cannot continue in this direction. We waste the whole day on this. What can we now do? Do you understand? We are going to come up with what? Depreciation rate. How do we determine the depreciation rate? Depreciation is always in percentage. Are you with me? We calculate the depreciation of the what? Depreciation rate for all the assets. How do we come up with depreciation rate? Each year given to you, look at it, you were given 50 years here. You were given 10 years here, 8 years, 10 years, 5 years, 10 years, 5 years. We use here to calculate the depreciation rate by dividing what? 100 divided by the number of years. Then the depreciation rate will now be what? Now, we can now say that depreciation rate for the first one, land and building. That one is equals to what? Hundred divided by 50. That's what? That will give us 2%. What was the second one?
Furniture and fittings.
Furniture and fittings.
Huh?
That one will give you, how many years is that one? 100 divided by the number of years.
10. Okay. 10. It's 10.
10, Abby? I'm coming.
Yes.
Hundred divided by 10 years. That one will give us how many years? That's 10%.
Office equipment.
The next one is what?
Office equipment.
Office equipment. Now, office equipment.
2.5 years.
That one is how many years?
12.5 years.
8 years.
12.5 years. Yes, 8 years.
8 years.
12.5%.
Yes. That one will give us 12.5%. The next one called
Plant and machinery.
plant and machinery. That one is how many years?
years.
10
years. 10.
10 years. Then that gives us another 10 years. The next one is what?
Motor vehicle.
Motor vehicle. That motor vehicle is how many years?
It's 5 years.
5 years.
Yes, sir.
That one will provide us what? 20%. Then the next one.
Computer equipment.
Computer equipment. 100 divided by how many years?
By 10.
10 years.
Yes, sir.
That one will also give us 10%. The next one is what? Equipment on lease, Abi. Is it correct?
Equipment on lease. Yes, sir.
How many years is that one?
5.
That one give us what? 20%, Abi?
Yes, sir.
Now, those percentage, we now put it at the rate here. The first one, 2%. Second one, 10%. The third one, 12.5%. The next one, 10%. What is it?
Sorry, sir, not you.
Don't let me waste time. 2%. The next one, that one is what? 10%, Abi? 10%. Followed by 12%, 12.5%. Followed by what again? Plant and equipment. That one is what? 10%. Motor vehicle, 20%. Computer equipment, that one is how much? 10%.
3%.
The last one is what? 20%. We have done that. Then let's move to the next level. Now, going back to where we are coming from, The next one, we were told that working note 2, the assets of the company were revalued, and I told you how to treat what? Revaluation. When you revalue an asset and the asset is having accumulated depreciation, you will net off the accumulated depreciation from the surplus, revaluation surplus. What do we have in the question? We're told we have revaluation surplus, Abi. Land and what? Building were revalued, and by Parisco and Associates, the value which was also what? Hello?
Hello, sir.
Yeah. What do they say the value happened to?
Is it a surplus?
It's a surplus based on what we have.
Okay, so surplus is 150,000.
Look at it. Produce a revaluation surplus of 150 million over the carrying amount as at January 1, 2018. Now, that surplus, what you will do is to net off the accumulated depreciation of that asset, and the remaining balance of that surplus will be what? Added to your asset account. And what do we do? Do you understand what I've made mention of here? We are meant to write off this particular figure here, that depreciation here, that is minus 150,000. Can you see it? Then
Yeah.
from that 150, you remove 50. What is the remaining balance?
100 million.
Yeah, that 100 will be what? Recognized under the asset account. Is it clear?
Yes, sir.
What's the next one?
Furniture and fittings.
Now, the next one in the question here, university purchase plant and machinery. That's note what? Note 4. University purchase plant and machinery, which was imported from United Kingdom at a cost of 430,500,000, and the installation and transaction cost is what? How do we treat this? What do we need to do? Here we now come up with plants. Plant and machinery. What do you say?
I said 451,000. You're adding it up, sir.
I'm coming. Then what we have, what is the cost? The purchase price?
430,500.
Purchase price. 430,000, Abi? 430,500, Abi?
Yes, sir.
Installation cost and what?
20,500.
Installation
And transportation.
How much is that?
20,500.
20,500. When we add it together, what do we have?
451,000.
That is what we are now going to recognize as purchases here. That is addition. What we have purchased under plant and equipment. We put it there. That's the new asset we have purchased. What's the next one? We also have deputy bursar that prepared the non-current asset schedule last year, classify some of the computer equipment purchased on May 15, 2017.
Okay.
costing 26 million as office equipment. Now we now move it from the office equipment to computer equipment. That is what we call reclassification. How much is the cost? Reclassification. We move it from the office equipment 26 million. Then we add it to computer equipment 26. That's all. Is it clear?
No.
Reclassification. They mistakenly put it under office equipment. What they purchase is office is what? Computer equipment. But when they do the classification, they put it under computer. I mean, what do you call it? Office equipment. We move it away from it and put it under the computer equipment. That is the classification we are doing. Is it?
Yes, sir.
The next one. Then we also have office furniture. Office furniture and fitting costing 12,250,000 were disposed of. That's the cost. What do we do with the dots? Were disposed of for 11,500,000, which resulted into a profit of 750,000. Now, in this scenario, you were given a profit. You cannot use the percentage to calculate what? Depreciation, simply because they've determined the profit for you. How do we now go from there? We do the calculation to determine the depreciation. Now, let's go. How much is the cost of the asset disposal? How much is the cost of the asset?
The cost of assets is 12,250,000.
12,250,000 with less it. Anytime you dispose an asset, you less it off.
Sorry, sir.
Okay. What else again?
The cost. Sir?
That's with less the cost. We are coming back here. Don't worry. We'll do the next one. Don't worry. Just let's finish the first phase. Then we'll go down to the second one. Then to come up with what we need to. What's the other one we're also doing?
Lease.
Lease, Abi. Now, for the lease, how do we go with the lease? We have the principal sum of 45 million. That is, if you are buying that particular asset, you are buying it outrightly, you are meant to pay 45 million. But if you are buying it at least, you'll be paying a lease rent of 10 million annually. If you multiply 10 million times 50, what do you have? Times 5, that is what? Look at what I'm saying.
50 million.
Yeah, 50 million. Now, see. That's working note number 3. This one is working note number 2. We are now on working note number 3. Lease. Lease agreement. Now look at it. The principal sum is how much? $45 million. Is that not so?
It is, sir.
Okay. Now, if you now look at what? The lease payment, total lease payment, total lease payment. for 5 years. For 5 years. That will give us what?
50 million.
That's 10,000, Abi?
Yes.
Times 5. That is 50 million. Now, the difference between the two, are you with me? The difference between the two is called what? Lease interest. Lease interest. Of how much? 5 million. Is it clear?
Yes, sir.
Do you understand what we have done there?
Yes, sir.
Now, and you were told that this lease must, under the finance lease must be what? Capitalized. The lease payment under finance lease, based on what I told you, must be what? Capitalized. You need to capitalize it. Now, simply means the interest and the amount you are meant to recognize, you can't recognize the principal sum of 45 because interest is part of it. How do we come up with the analysis? Look at it. Annual principal payment. Look at it. That one is 45 divided by 5. That's what? 9. Is that not so? 9,000. Look at the interest. Annual interest payment. That one is how much? 5,000 divided by 5. That's what? 10. If you add the two together, that gives you what? Hello?
Yes, sir.
That is the 10,000 you are paying monthly. I mean, you are paying annually, which is what? The annual lease payment. Annual
Lease payment.
lease payment. Is it clear? Which means the principal and the interest is meant to be capitalized. And when you are capitalizing it, the first payment is 10,000, the second payment is 10,000, the third payment is 10,000, the fourth payment is 10,000, the fifth payment is 10,000. Addition of that is what? 50 million. That's 50,000. That 50,000 is what you are going to recognize as your what? Your cost for that particular what? Lease purchase. Which means under the lease agreement here, we are meant to recognize the total sum of what? 50 million. Is it clear?
Yes, sir.
Because we are meant to capitalize the interest. Now, what's the next one?
Okay.
During the year, the university acquire fleet of what? Vehicle at rate of what? 50,000. Then we go to what? Vehicle. 50. That one has no calculation. Straight away, 50,000. Any question? Any question on the first phase? We have no question. Then we add it together. What's the total addition? Can you see it?
Okay.
Now, we have done with the first phase. We now need to do the second phase, which is what? The depreciation. Now, we pick it one after the other. This one, we have done this one. Now, on this one, we're told that they dispose an asset of, Abi, and this is the cost of the asset. What about the accumulated depreciation on that asset they've disposed of? And we're giving a profit on it. We now need to work back. Let's see how we are going to work back. Now, we call it what? Are you all with me? Number 4, working note 4. We call it what? Statement of profit or loss on disposal. What is the asset they dispose, please? F and F, office furniture. Abi?
Yes, sir.
Now, we come here. What is the proceed on that disposal? How much do they realize on that asset when they dispose it? Proceed on disposal. How much is that?
150.
How much is the asset? How much do they realize on that asset?
They realize 150 million.
No. Office furniture. Office furniture that cost 12,250,000 was disposed of during the year for 11,500,000. That is the proceed on that disposal is 11,500,000. That is what they call proceed. 11,500,000. Is it clear?
Yes, sir.
Then we need to determine net book value or carrying what amount of their assets. How do we determine that? We come up with the cost. What is the cost of that asset?
So, 12,250,000.
Coming on. The cost of the asset is how much?
250,000.
12,250,000. What is the accumulated depreciation on the asset? Are we given?
No.
We're not given. Let's name it X. We're not given. We're asked to look at it. That's what we are looking for. We less it. When we less it, we are going to get here. Now have 12,250 minus X. When we now less it, we have a profit. We have a profit of
750. Minus.
when we less it from the proceed, we have a profit of how much?
1250.
Abi?
Yes.
Is that not so?
It is.
Now, on this now, you will now use your mathematical what? Experience to solve the question. How? Look at it. 11,500 minus, open a bracket, 12,250 minus, Abi, X,
Yes, sir.
close the bracket, equals to what? 750. But in the bracket, you have 11,500 minus 12,250 plus X. That's minus times minus, give you what? Plus, equals to 750. Is it cleared up to
Yes,
that
sir.
level? Now, 11,500 minus 12,250, what do we have there?
Okay. It's 750.
Minus 750.
Minus 750 plus X equals to 750. What do we do from here?
Collect the next one.
Minus 750 plus X equals to 750. Then that will now be what? We collect what?
Next one.
Collect like terms. That will now be what? S equals to 750 plus 750. S is what? S is what?
1,500.
1,500. Now test it. Now depreciation you have calculated, minus it from 12,000. What do you have? 12,250 minus 1,005. What do you have?
10,750.
When? What do you say?
10,750.
10,750. 10,750, Abi,
Yes, sir.
minus 11,500. What do you have?
Minus 750.
Yes.
I'll be
That should be
750.
what? 750, because 11,000 will come up. Yes, we have 750 is correct. Then we can go to where we are coming from. Our depreciation here for asset they dispose is 1,500. Is it clear? Is it clear? Hello, do you understand what we have done there? The depreciation we need to calculate, because you know we have sold an asset. We remove the asset from the fleet of the asset we have there. Then the depreciation application you have charged on that asset you dispose, you also need to remove it out. Then the next one you are meant to look at now is the asset that they reclassify. That one you were not given anything on that. Then what you need to do, you use the word depreciation rate to calculate that. How do, because they said any asset purchased during the year, they charge full year depreciation on that asset. What do we do? What is the asset they dispose of? This amount. We calculate the asset here. Do you understand? Times the asset rate. That's the depreciation rate. That is 3,250. That's the depreciation we have calculated there. We multiply the cost of that asset times the rate of the what? Depreciation. This is what we have. We now take it to where we have added the asset to. How much is that?
3,250.
We just remove it from there, add it to the what? To the depreciation of where we added the asset to. Which other one are we working on? We work on this, work on this, we work on this. I mean, then the next thing to do is to calculate the current depreciation. How do we calculate the current depreciation? This is it. The closing balance of the depreciation given to you times the rate of the asset. Closing balance of the what? Asset. This is the closing balance of the asset. Maybe you can see this. Can you see it? Times the rate of the depreciation. That is what we are going to do to all the assets. Any question? 10,000 times this is what we have. 0.5 times this is what we have. 10,000 times this is what we have. 20,000, 20% times this is what we have. 10% times this, we have this. 20% times this, we have this. Then what is the total? We now calculate the total of everything here. This is what we have at the end of the day. To this now, the current balance of the assets. How do we calculate net book value or carrying amount for the current year? The closing balance of the asset minus closing balance of what? Depreciation. That's accumulated depreciation. That is, that's 6 million minus 12 million. We have this. That is what we are going to do to all other assets by dragging that. We have the total of that asset to be how much is straight away. And now, to do the 2017, you consider opening and opening. You compare the opening balance and the opening balance of the depreciation. How do we go from there? This, we're giving 500 minus how much? 50. That's 45. Then drag it. This is what we have. What is the total? This is the total. Any question? Any question? Any question, please? Hello?
No question, sir.
Okay, we are done with this. A, B part of that question too. A and B. Now let's look at what? Cash flow. That one is on. Cash flow is on IPSAS what? Solution. On IPSAS what? Do you still remember? That's IPSAS 2. I've given you the format already. Abi, have we solved question on cash flow? I want to know, please. I've solved one question on it.
No.
You gave us the formula, sir. I was in class when you solved.
We're not in class.
I remember when you gave us the formula, but I don't know whether we solved it.
Others, please, have we solved question on cash flow? Please let me know.
No, sir.
We have not. Okay, no problem. Let's go. Now, look at the second question. Be part of this question. Look at it. Amotekun State University of Education Ode was the second university established by the Amotekun State of Nigeria. The government has a mark of its commitment towards the survival of this young institution, has continued to support the university Senate in all its efforts at the last minute of the stakeholders held at the State Hotel Igbo on June 30th, 2019. The Bossa presented the financial report, the financial statement for discussion and approval. Now, this is the financial statement that they have prepared, 2018 and 2017. We have the asset, we have the construction in progress, we have library development fund, we have the current asset inventory, account receivable, cash and bank balances, we have the total assets. Then here we have the current liability, we have the payables, we have short-term loan, we have consultant order, we have the total current liability, we have the net asset, we have the total net asset, we now have the net assets equity, we have the state and capital grants, we have the operation, then we have the total net assets and this. The following additional information was also given to you, where we have the income statement. Under the income statement, we have the state government current grant, we have the internally generated revenue, we have the miscellaneous income, we also have the expenditure, academic and administrative expenditure, we have the depreciation, then we have operating surplus, accumulated operating surplus. Then they now said the following, which form an integral parts of the account, were also provided. This is said to be the note to the account. We have the note 1. This is it. We also have the cash statement, which is note 2. We have the note 3. Then the chairman. They now said the chairman of the council, which incidentally.
Give me borrow a bit.
Hello.
Sorry.
Now, the chairman of the governing council, who incidentally is a chartered accountant, observed that the financial statement appeared incomplete because no statement of cash flow was required. Prepare a statement of cash flow for Amotekun State University of Education for the year ended 31st December 2019 using direct method. How do we go from there? We want to use direct method. Are we together? Hello? Are you all with me? Yeah. Now, how do we go from there? Since you are using direct method, we've read everything. Now, let's go. What's the name of the organization?
Amotekun State University of Education.
State University of Education. Now, what do they say we should prepare? Statement of cash flow for the year ended 31st December what? 2018. Now, based on our experience, the format given to you, what are we having now?
Cash flow from operating activity.
Okay, thank you. Then it's in thousand, Abi. You were given in thousand. Is that not so?
Yes.
Now, the first thing we are putting here is what? Cash flow from operating activities. Are we good to go?
Yes.
Now, based on what we have, what are those activities that will fall under here from the information? The first thing to look at, you go to your income statement, income and expenditure statement. That's your statement of financial performance, to extract those inflow that relates to the activity. Then after that, you will also go to the what? Current asset and current liability. Those ones, they are also related to the what? Operation. Those are because those that has to occur on a yearly basis. And that has to occur on a yearly basis, they are under operation. Is that clear? Is that
Yes.
Now let's go. Now let's go there. What are the things we are meant to extract from that? From the income statement. Now looking at it from the income statement, does anyone have a question to ask? Hello?
Yes, sir. Good evening, sir. Please, sir, how do I get the question? You know what page it is?
The number of the page where the question is, Abi?
Yes, sir.
Okay. I'm coming. The question is on page 257 of the material. 257 of the material.
All right, thank
257.
you, sir.
You're welcome. Now let's now look at what? Income statement. Now on the income statement, we have what we call the recurrent grants and internally generated revenue. We're now told that that recurrent grant is relating to note what? Note 3. Go to note 3 and make up that note 3. Is that clear? First and foremost, only for 2018, you are not meant to compare here. Is that clear? Any revenue you are relating is only that particular year's revenue you are meant to recognize when it comes to this operation we are looking at now. Then, how do we go from there? Note 3. Let's go to note 3. In our note 3, note this note 1, this is note 3. Under that note 3, can you see it? State recurrent grant. We have it there. We have the capital grant. That one doesn't form part of what's being recognized. We only have 42,400,000. Now, that is what we are going to recognize in our book. Can you see the 42 million? 42 million. We need to recognize that. Is that clear? We also need to recognize internally generated revenue of 4.42 million. We also need to recognize miscellaneous income. Can we go, please? Oh, yeah, give me the figure. You with me?
Yes.
Now, what do we say we have? State what?
Recurrent grants.
State recurrent grant. How much is that? How much is state recurrent grant?
42,400,000.
42 million.
400.
Okay. After that, what other inflow do we also have? Now let's create for you to have what idea of this. Let me call this one receipt. You can have a better understanding of what I'm talking about. Receipts. Then after that, what are the other inflow again we also have?
Miscellaneous.
They are taking up our lights. We need to sort out
Generated revenue.
and possibility that the system. What's our time now? Have I used up to 2 hours? Yes, almost 2 hours. Now let me quickly run through the first phase. We'll continue from this place next class. Then what is the next one after recurrent grant? State recurrent grant. What next?
Internally generated revenue.
Internally generated revenue. Internally generated revenue. How much is that?
4,420,324.
4,420,000. Abi?
20.
Abi? Is that all?
It's in 324 since we are writing it in thousands.
Which means we need to ignore that because some of you might not get it clearly. When you are reading, you might find it very difficult to understand. I've recognized everything here.
Okay.
This one is 4,000,000.
440,324.
324. Okay. Then what's the next one?
Miscellaneous income.
Miscellaneous income. How much is the miscellaneous income?
552,202.
500 and what?
52.
552,000.
Yes, 202 naira.
202. Okay. Now, after gathering all this together, what are the other things that also serve as what? Operation here. Do you understand? We have what? Receipts there already. We have accounted for that. Let's also look at what? The payments. Have great space. Payment. What are the items that we paid out that has to do with cash only? Cash items only. Cash items only.